Hello there and welcome back to Cryptocurrency Secrets. In this module, we'll be discussing the effective channels for you to collect more Bitcoin to maximize your investment. There are 6 methods for you to earn more Bitcoins, and it's not only restricted to cryptocurrency exchange or trading. The 6 methods are 1. Cryptocurrency exchange, 2. Faucets, 3. Microtasking, 4. Supplying Bitcoin-related services, 5. Becoming a Bitcoin escrow agent, 6. Bitcoin affiliate marketing. The first method to collect more Bitcoins is by cryptocurrency exchange or trading. As mentioned in the previous modules, there are various forms of trading or exchange options available for Bitcoin. You may trade Bitcoin for Bitcoin or Bitcoin with other cryptocurrencies, and even Bitcoin with fiat currencies. But most importantly, ensure you have equipped yourself with the knowledge required to start exchanging Bitcoin, so you know the risks involved as well as how much you need to invest as a beginner. One of the most common ways of accumulating and earning Bitcoin through trading is by day trading. Day trading is buying and selling of Bitcoins on the same day based on small, short-term price fluctuations. Therefore, when you observe the market and notice that the value of Bitcoin is going up, it's a good time to purchase some Bitcoins and sell them right away after you've made your profit. The second method to earn Bitcoins is through faucets. What are faucets? Faucets are websites which give away Bitcoins on a regular basis. They may give away Bitcoins every minute, every 10 minutes, every hour, or once a week. All you need to do is sign up on the websites using your Bitcoin address and sometimes your email. And if you're selected, you get the Bitcoins. However, one downside to this method is the amount of Bitcoin given away. It's not as much, and sometimes the most you'll get is 0.00288 BTC, which equals to around $1.31. But still, who would want to give you Bitcoins for free? And looking at how volatile the cryptocurrency market is, it is definitely worth the try. Some of the popular faucets you can try to sign up to win your Bitcoins are Bitcoin Zebra, Moon Bitcoin, Weekend Bitcoin, Milli. The third method to earn your Bitcoin is by microtasking. Microtasking is websites that pay their users using Bitcoin for completing tasks, such as filling out surveys, watching videos, and signing up for new services. You can sign up for free and all the tasks can be done within your own time. One example of a microtasking site is CoinWorker. Next, you can earn Bitcoin by offering Bitcoin-related services. Not many people know that you can get paid with Bitcoin instead of fiat currency for offering Bitcoin-related services. If you want to get an idea of what services you could offer, you can visit Coinality, a site which gives current updates on Bitcoin jobs posted online. You can also visit Bitcoin Talk, a forum which discusses a wide range of cryptocurrency topics, including a services thread where users are searching for Bitcoin service providers. Some examples of services people are looking for are blockchain developer, website manager, graphic designer, mining expert, online marketer, writing for cryptocurrency blogs and new sites. The fifth method for you to earn more Bitcoin is by becoming a Bitcoin escrow agent. Now, what's a Bitcoin escrow agent? An agent handles the third-party escrow service of a Bitcoin transaction. Bitcoin escrow agents are getting more and more common as escrow protects users from fraudulent buyers by requiring the Bitcoin to be deposited up front. Usually, Bitcoin transactions are anonymous exchanges that involve untrusted parties. In an event where the sellers turn out to be scammers, the escrow agent will act as an arbitrator and will determine who will receive the Bitcoins. Many Bitcoin marketplaces provide escrow services such as Local Bitcoins, Crypto Thrift, and BitPremier. To be an escrow agent, you must build up your reputation as a trustworthy party in the community. Last but not least is getting involved in Bitcoin affiliate marketing. For those who are not familiar with affiliate marketing, the idea behind it is that you promote someone else's product and they pay you a percentage of the profit based on the sales you bring in. Let's illustrate an example. Let's say you decide to promote Trezor, a hardware cryptocurrency wallet. If a person decides to purchase a Trezor and the customers came from your site, you get a commission for it. And the best thing is, you earn your commission in Bitcoin, where previous Bitcoin affiliate marketers have reported reasonable values of Bitcoin being paid to them. I've already listed the possible methods to earn your Bitcoins. Always remember, whatever method you choose to venture into, there's no such thing as easy money. If earning Bitcoins were that easy, everyone would have done it by now. In each of the methods listed above, you'll either need to invest your time or your money. There's no easy way out. Try what works for you and be patient with the results. All the best. Time for you to get to know the advantages of using cryptocurrency. As a digital asset that serves users online, cryptocurrency has many appealing benefits. Some of this is thanks to the blockchain technology previously mentioned. It's a strictly monitored process with encrypted transaction and control, thus making this online money a thing for the future. So in this chapter, we'll cover the top 4 benefits of cryptocurrency. The most well-known benefit of this investment is its no third-party involvement. There's always a pattern when using traditional money to buy yourself a new property, setting up your own business, or buying a new car. One way or another, the process requires a third-party involvement. We're talking lawyers, owners, and other external factors such as delays, documentations, and extra fees. This, in general, will consume unnecessary time, money, and energy to the point of giving up. A good example of this scenario would be you're buying a new house. You need to pay a financial advisor who in general advises your financial statement to ensure you have a stable income. Some properties require you to pay for a booking fee to lock your house of choice and many other add-ons. In short, there's a lot of third-party involvement, and it charges you even before you own the property. But this is not the case with cryptocurrency. As mentioned previously, the blockchain system is similar to a self-rights database. It means the contract is capable of being designed and enforced to remove any involvement of the third party mentioned before. Moreover, the contract can be customized to complete a certain transaction at a set date at a fraction of any expenses. Yes, you can eliminate any third-party involvement options. In fact, you don't even need one. In short, you are in control of your own money using cryptocurrency. This is what we call the decentralized system, which means there's no central or federal government regulating it for you. Your transaction is practically immune to any influence from your government and its distinct manipulation. So, it's possible to be able to pay and receive money anywhere in the world at any given time. That transaction is done with minimum processing fees, thus preventing users from having to pay extra charges from banks or any financial institutions. The next advantage would be the risk it holds is lower than traditional currencies. In this era, most people rarely have their cash in their possession now. Instead, they have an array of credit cards, debit cards, and other payment cards available as their nation's method of payment. There's nothing wrong with that, except, however, if the store's connection to the server is disconnected, or their machine's out of service, and you, who do not possess any cash, just ended up holding the line. The thing about these cards are, any purchase you're making, you're giving the end receiver access to your full credit line, no matter how small the amount of the transaction is. The fact that you're giving someone your card to gain access to your account is already a form of breach. Most of this breach is considered secure nowadays using different safety measures like PIN-enabled or PayWave methods. Then the store initiates payment by pulling the designated amount from your account using the information provided within your card. Cryptocurrency doesn't work that way. Instead of pooling mechanisms, it pushes the amount that's needed to pay or receive to other cryptocurrency holders without any further information needed. Payments are possible without your personal information being tied to you, the transaction. Your account can be backed up and encrypted to ensure the safety of your money. By allowing users to be in control of their transactions, helps keep Bitcoin, Ether, or other distinguished cryptocurrencies safe for the network. Another benefit of using cryptocurrency would be its protection from fraud. We've often heard cases where one's payment card is being used by other users but not the owner. When contacting his card service issuer, it's found that the card has made certain transactions without his consent. This is what we call a fraud case. Most of the time, these fraud cases get away with the crime because it's not easy to trace the fraud back to the perpetrator. What's more, it's even difficult to get the attention of law enforcement to launch an investigation with only a single instance of a crime the perpetrator committed. However, cryptocurrency is not viable to fraud because your personal information is kept hidden from unnecessary prying eyes. This protects you against identity theft. Remember, cryptocurrency is a form of digital money created from code. Individual cryptocurrencies are, as mentioned, digital and cannot be counterfeited by senders. Because the transactions cannot be reversed, they do not carry with them any personal information. This ensures security, and the merchants are protected from any potential losses that might occur from fraud cases. It's very hard to cheat or make false accusations against anyone using these cryptocurrencies due to its decentralized system and the existing blockchain system. It cannot be manipulated by anyone or any organization thanks to its being cryptographically secure. Lastly would be its universality. Over the course of payment history, nations worldwide have their differing methods of payments implemented. We have money-goods exchange system and even bartering trade. It's not until traders visited other countries that they found out how to trade items to one another. Thanks to various innovations and developments, we now have multiple methods to trade and exchange money worldwide. But even with all the upgrades, we're still experiencing problems doing transactions across the globe. There's always currency issues, bank authorizations, unacceptable payment methods, and some other varying issues experienced by business owners or travelers out there. The fact is, not all countries have similar financial processing. Your card or currency may not be accepted by other countries, and that is a major setback to your account. For example, most online banking, payment, or cash systems require additional processing fees for their service, even if that account is yours. However, cryptocurrencies are not bound by any of those exchange rates, transaction charges, interest rates, or any other fees applied on any countries. They can be used at any time at any international standard without experiencing any problems. It also saves you a lot of time and money by reducing additional spending over transferring money from multiple countries to another, which means cryptocurrency operates at an international platform, which in turn makes transactions easier than your average telegraphic transfer. To recap, there are 4 major advantages concerning cryptocurrencies. It has no third-party involvement, lower risk compared to traditional currencies, protection from fraud, and universality. Despite the amazing advantages that comes with cryptocurrencies, there are also some setbacks to this investment as well. We'll uncover those in the next chapter.